Good morning and welcome to Member Focus Monday. I'm Christina Schaefer, Director of Social Media for HAR, and I am joined this morning by Patrick Jankowski. He is the Senior VP of Research for the Greater Houston Partnership. Welcome back to our program, Patrick.
Christina, it's good to be on. I always enjoy talking to the members of the Houston Association of Realtors. You guys are a great group.
And they always enjoy hearing from you. We got a lot of great feedback when we started promoting this because obviously this is a very important topic to our members. Just so we can, in case anybody who's tuning in today hasn't heard from you before, if you could just tell us a little bit about your background, Patrick, who you are and what you do at the partnership.
I'm the SVP of Research at the Greater Houston Partnership. The partnership is a very large business organization here in Houston. We like to think we're the largest and the most influential, not just in Houston, but in the state. We have encourage you to check out our web address, our website. We have the easiest web address in the world, www.houston.org. And you can go to that web address, and we do have a lot of information about the economy. You can even call up our monthly newsletter, Houston, the Economy at a Glance, at the website. And if you're interested in getting more information similar to what I'm going to be sharing right now, you can go to the newsletter, and there's a spot there where you can click on it to subscribe to that. My job of the partnership is one is I manage a research team that provides all the data and analytics the organization needs to pursue its mission. And I also monitor and speak on the economy to our members in the business community to help them understand what's going on. We like to think by getting the information out there, members of the business community can make a better informed decision.
Absolutely. And I have to say, I truly appreciate getting that economy at a glance once a month because today we're going to be primarily focusing on real estate, on the economy, talking about some employment rates, but you really dive into every sector in the Houston area. So we truly appreciate that. So let's.
Yeah. If you go online and call up the March one, you'll find out a lot about what happened with population. We're going to talk a little bit
Yes.
about it now, but there's even more detail in the March newsletter.
Yes, absolutely. We're going to get into that in just a little bit. Now, I'd like to start off talking a little bit about the employment rates because we've seen and heard the national headlines about decreasing unemployment rates. Where does the local employment rate stand? And do you believe those numbers will remain the same or change soon?
Right now, we're doing pretty well. We have a fairly low unemployment rate. It's 4.4%. Kind of put that in perspective, in April of 2020, during the peak or the early days of the pandemic, our unemployment rate got up to 14.4. So you can see we've dropped 10 whole percentage points over the last 2 years. Uh, just before the pandemic in February, we were at 3.8. So we're a little bit about where we were prior to the pandemic. But gosh, anything below 5 is really good. And anything below 5 shows that we have a very tight labor market.
Hmm.
So
That's wonderful. So let's talk about the population growth, as we mentioned. So, what does the population growth look like in the Houston area, and how does that compare to other large metros?
Okay, Christina, if you'd call up one of the slides that I shared with you
Sure.
earlier this morning. Okay, what you're looking at the screen, this is the 10 most populous metropolitan areas in the United States. I've highlighted number 5, Houston, so you can see that. We are the 5th most populous. If you look, Chicago's number 3, Dallas is number 4, and you can see that gap. Dallas is ahead of us by 250,000 people. Chicago is ahead of us by 2.3 million people, roughly. So the odds of us catching Dallas or Chicago are actually pretty slim. If you look below that, Washington is 6.3, Philadelphia is 6.2. So the odds of us slipping from 5th to 6th or 5th to 7th are already pretty narrow. We're pretty much going to be ensconced at the 5th place for quite some time. So that's something we should feel good about. Let's go on to the next slide. Okay, this is what happened with population over the last year. Need to let you know that Census Bureau, they're a little odd. They don't do an April to April as you might think when they do the annual census. They do a July to July.
Mm.
But you can look there and you can see what happened with the 20 largest or most populous metropolitan areas. I highlighted Houston. We added 69,000 new residents last year. But look at all the red there. Look at New York. Look at Los Angeles. Look at Chicago. Look at Washington, Philadelphia, Miami. My gosh, look at San Francisco. Houston did real well. I hate to say this, Dallas is number 1 for population growth. I kind of always hate to say anything nice about Dallas, but I guess I have no choice. Phoenix was number 2 and Houston was number 3. So we actually did pretty well. But you need to understand that's not all people moving here. Go ahead and call up the next slide, Christine.
Sure.
We'll talk a little bit more about population. This is some indication of how many people moved here last year. It's a concept called net migration. Now, in a normal year, we might have 200,000 people move into the region, and then we might have 170,000 move out. And that would leave us with a net of around 30, 31,000. And you can look and see as far as people moving to a metropolitan area, you can see Phoenix and Dallas and Tampa and so forth. A lot of what you see is, if you look at that, it's kind of nice to see that you've got Dallas, Austin, Houston, and San Antonio. For the ones that had the greatest migration were in Texas.
Hmm.
And you can look and see, though, there's pretty much a theme there. It's pretty much in the South. It's pretty much in the Sun Belt. We did not have people moving here for a while, especially immediately after the fracking bust, immediately after Hurricane Harvey. But it's nice to see that population growth continuing. Now, this is net migration. This is the difference between people moving in and out. There's another component of migration. And Christina, if you put that next slide up on the screen, I'd appreciate it. So this is something called the natural increase. Every year you have a significant number of people who are born in Houston, and then you have a certain number that pass away. And the difference between those who are born and those who die gets you what's called a natural increase. Houston did real well. We ranked second in natural increase. If you remember, I showed you that New York lost, 370,000 people.
Mm-hmm.
If it hadn't been for the natural increase, they would have lost even more.
Wow.
New York had a significant number of people moving out. But if you kind of put that in perspective, over the last 10 years prior to the pandemic, we averaged about 96, 97,000 births every year. And then we averaged about 38,000 deaths. And that just kind of switched. Actually, births were down by about 6,000 from the long-term trend, and deaths were up by about 15,000
Mm-hmm.
from the long-term trend. And I don't know, I can't tell you what happened with births, but a lot of that 15,000 is related to COVID.
Yeah. Yeah.
And so we can definitely see the impact on COVID on Houston's population growth.
Mm-hmm.
If we had not had the COVID and the deaths were at the normal rate, Houston's population would have gone up by about 85,000, not 69,000.
Wow.
Okay. There is one other thing I'd like to point out. You've got it here on the screen. You can see it there. We are seeing a shift in where population growth is occurring. And if you go up to the very top bar across there, you can see it in 1991, roughly 30 years ago, you can see 3/4 of everybody in this region lived inside Harris County, and about a fourth of them lived outside Harris County. And as we see more homes being built in the suburbs, as we see more businesses moving to the suburbs, we're seeing that garnering more of the population out there. And you can look and see over time how we've gone from having roughly 76% of the region's population in Harris County to 60% of the region's population in Harris County. That's a trend that's not going to stop. We're probably going to, at some point, it's very far in the future,
Mm-hmm.
but at some point you're likely to see more people living outside Harris County than in Harris County. Now, it does kind of bother me. I live in Harris County. I live in the city of Houston. I'd like to see Harris County continuing to hold on to its share of population, but that doesn't seem like that's going to happen.
Okay. And thank you for sharing those slides with us. We had a few people asking for those slides, and we will, of course, share those in the comments. And again, Patrick, thank you for putting those together for us and allowing us to share those with our members, because that's important data that they don't often have access to. So thank you for that.
And you saw me glancing down, and I need to apologize to the viewers. I just kind of wanted to let you know I've got to look at some notes. I mean, a lot of numbers, I can't keep them all in my head. But just to give you some idea of what happened last year, what's happened over the last 10 years, let's say this. In the last 10 years, Fort Bend County has added 250,000 people. Harris County has added 550,000, but it's not enough to hold on to its share of the population. Montgomery County added roughly 178,000. And then after that, you're looking at Brazoria County added about 61,000. So if you want to know where the population is going, that's where it's going. Fort Bend County first, Montgomery County second, Brazoria after that. But we did actually start to see some pickup in population growth in Waller County and in Chambers County.
Mm.
Waller doesn't surprise me because that's going out to 90 way. Chambers up northeast did somewhat surprise me, but I think people are choosing the piney woods over the coastal prairie.
Alrighty. And I think if we go back and revisit a presentation from you a couple of years ago, I think you predicted those areas and that population growth. So that's why we like to call on you.
Gosh, I wish I'd put some money on that. I wish someone would have made me a bet.
Exactly. So let's talk a little bit about affordability and pricing, because as you know, on our last market update, we showed a record-breaking average home sale of over $400,000 for the first time ever. And Houston has always been considered one of the most affordable large cities. Do you think that's still a valid statement? And what are your thoughts on the home affordability in the Houston area?
Well, it depends upon your perspective, whether you're someone who's lived here a long time or someone who's moved here to the region. If you've moved here from outside the region, Houston's housing looks like a bargain. Roughly, the single-family home sold in Houston for an average of $410,000 in the month of March. You're looking at paying twice that much for the comparable home in California.
Mm-hmm.
So one thing I want to dispel a myth, though, it's the prices aren't being driven up solely by people moving here from California overbidding on houses. It's a combination of factors which is driving the housing market. I'm sure you guys know that as you talk to people out there. For one thing, millennials are buying houses that haven't bought houses before.
Mm-hmm.
The other is you've got people rushing to try to buy a house before interest rates go up because they're worried about being able to make the payment.
Mm-hmm.
You also have this kind of the work from home, with people needing to work from home or being able to work from home more often. They're looking for a nicer house. They're looking for a third or even a fourth bedroom, and some of the builders out there are taking their third and fourth bedrooms and not making them bedrooms, so it make work from home offices. So it's all those factors. Okay, as I said, if you've moved here from outside the region, housing looks affordable. But if you've lived in Houston all your life, it looks very unaffordable. It's gone up significantly. Once again, I'm going to have to look at my notes because I want to be able to cite something real specific. I went and did a little bit of research. Okay, single family home in March of this year sold for roughly $410,000. March of last year, it sold for $369,000. March of 2020, a little bit funny because that was the middle of the pandemic, $309,000. So you can see over the last 2 years, the price of a single family home in Houston has gone up $100,000. Now, it definitely impacts affordability. It definitely makes it more difficult for families to be able to buy a house. So it is very much a very valid concern. What you're going to see is families are going to, some maybe stay in apartments, stay in multifamily units because they can't afford to move. Some are going to have to accept less house than they originally wanted to buy. Or tell them, there's an expression I'm sure is familiar with a lot of the realtors out there: drive until you can qualify, or drive until you can afford. Gosh, we're seeing projects out in New Caney. Golly, I remember when New Caney was a place you'd visit on a vacation, not the sort of place you'd live. So it's definitely driving it. So can I continue on with this?
Sure, absolutely.
Once again, I'm going to have to look at my notes. Too much for me to remember. I'm going to have to come up with some sort of trick, but I just did some math. I used your own calculator at your own website to figure out the impact of rising interest rates on a house. I put in $400,000. It's just a nice round number. It's easy to remember. 20% down, just principal and interest only. Okay, 3%, which was just last year. This time last year, the 30-year average mortgage rate was 2.97%. So at 3%, a $400,000 home, the principal and interest was $1,349, $1,349. Now it's at 5%. I went online yesterday to the Fed's website. Average rate was actually 5.18. We're going to say 5%. That same house note, just the principal interest is $1,718. So you're looking at the cost of the note has gone up over the last year about $360. So you're looking at having to spend $4,000 more than you were this time last year for a $400,000 home. And because of what we know, that's not the same home because of what's happened with interest rates. I am very much concerned about what's going to happen with interest rates over the next year. We know they're going to go up. The Fed has announced that. The Fed is trying to control inflation. If interest rates go up from 5% to 6%, that same $400,000 house principal and interest is going to be $1,900 and $1,919. If it goes up to 7%, that same $400,000 home, the note's going to be $2,100. So you're going to look at a period over roughly 2 years of a house note going up by almost $800. You ask me, is housing becoming unaffordable? Yes, it
Mm-hmm.
is. Those at the higher end, they're going to find a way to make it work. But those who are trying to qualify for some of those houses that are 250,000, there's still some out there, or $300,000. They're going to find it harder and harder to qualify.
Okay.
Now, what you're going to see is you're going to see people who are going to bust out of their paperwork. They're not going to be able to qualify. And right now, there are enough people in line. So if someone falls by the wayside, someone else will step up. But you're going to get to a point where there's not going to be anybody in line, and you're going to get to the point, and I don't know when that is, but we are going to start to see when interest rates go up at some point, the housing market cool off.
So that was my next question for you is the rise in interest rates, how is it going to impact us here locally in our housing market? So it sounds like you're saying we should expect a little bit of a slowdown as the interest rates continue to go up.
Well, that's the whole point of raising interest rates.
Mm-hmm.
The Fed is trying to lower inflation. Inflation, in the simplest terms, is being caused by there's too many people, too much money chasing too few goods. Or put it more simply, the supply cannot meet up with the demand. So classic supply and demand, what do you want to do? You want to raise the cost of something. If you raise the cost, you lower the demand. The way the Fed's going to raise the cost, it's going to make it more expensive to borrow by raising interest rates. As the Fed raises the rates it charges banks and banks raise the rates they charge each other, that's going to affect loans for housing, loans for automobiles, loans for appliances. I know there's some silly people out there, maybe I shouldn't say this, who will finance a vacation. I don't think that's a good idea. But what's going to happen is, as those rates go up, people are going to have to scale back on their purchases, and that's going to slow down the economy. And that's what we're trying to get at right now.
Okay. I want to backtrack just a little bit to you mentioned population growths in several counties. I don't know if you have these numbers in front of you, but Ann was asking about Galveston County, if you are aware of the population growth.
I have to look down. After I made that comment, I dropped my notes on the floor.
Oh,
And if you'll forgive me for one moment, I'm going to pick up that note.
that's how you know it's a live show, right?
Okay, now I've got my note. I've got my page. Yeah, I can tell you if you want to look at it over the last 10 years, Galveston has added roughly 60,000 people.
Mm-hmm.
Liberty has added 21,000. Austin's only added about 1,800. Austin County.
Mm-hmm.
Anyone else that you want to know about?
Yeah.
If you go on and you pull up the March newsletter, I've got
Mm-hmm.
all these numbers in the March newsletter. That's why I encourage you to go to Houston.org, find the newsletter at the website, Economy at a Glance. It's under Business Resources or Data. It'll be under one of those two links,
Mm-hmm.
and call it up and you can get more detail.
Wonderful. And we did share that link in the comments already, too. So, kind of correlating with what we were just talking about, TJ is asking, with the increasing rates, will rental rates follow? Or are rent rates strictly dependent on supply and demand of housing units? And also, is there any lag time between those correlations?
Okay, so excuse me, when you talk about rental rates, let me talk first about multifamily.
Mm-hmm.
There are people who would like to get out of multifamily into single family, but if they can't afford, they will stay in multifamily. Multifamily has done very well over the last 18 months. If you're a landlord, not if you're a tenant.
Mm-hmm.
Multifamily, the rents have gone up. For Class A, the nicer properties have gone up double digits over the last 12 months. If you think of it, it is a substitute good, if you want to speak in economics. If you can't buy a house, you rent an apartment. Or if you can't buy a house, you rent a house.
Mm-hmm.
So if the demand is there, it will drive up rents. It'll drive up rents or at least sustain them at the high levels. We're not going to see home prices go down. We're not going to see rents go down. What we may see as the economy cools, the rate of increase slow, but they're still going to increase. Some of the some of the multifamily Class A units are extremely expensive as well. You can look at spending $1,800 a month on a really nice Class A. At that rate, you can afford a nice single family house.
Mm-hmm.
So we'll look and see the interplay of it. But definitely as housing costs go up, it forces people to stay in multifamily in the apartments, and that tends to support those rents as well.
All right. Thank you for that. So I'm always asked, every time you come on our program, I'm asked to ask you this question. And that is, do you foresee many foreclosures in the Houston area soon?
Not in the short term right now. Uh, if you consider foreclosures are usually the result of obviously
Mm-hmm.
financial stress at an individual level. And as right now, the economy is in pretty good shape. Unemployment rate is at its 4.4%. Uh, if you're seeing foreclosures, it's not because people have lost their job, it's because maybe they got in over their head. If we start to see the unemployment rate go up, we might see some more foreclosures. But right now, the market is so hot, it's so tight, we have so few houses on the market.
Mm-hmm.
Someone with just a little bit of savvy who might be in financial duress hopefully could find someone to buy the house and take it off their hands
Mm-hmm.
before it gets foreclosed on. And so I really don't expect to see foreclosures go up in the short term. Now, a year from now, we don't know what the economy is going to look like. Some people think they know what it's going to look like.
Mm-hmm.
But a year from now, that may be another question. But over the next 6 months, no. If they go up from 2 dozen to 3 dozen, that's insignificant. Go up to 100, that is significant. I don't see that happening in the short term. The economy is just too strong right
Okay.
now.
Very good. Good. That's good news for us. Donna had a question here about increase in tax rates. She said she's had several clients ask that her to help them with their taxes. How do you think this will impact people being able to afford their homes?
Oh, obviously it goes into affordability. Those numbers I were just citing were principal and interest. It didn't include insurance, and it didn't include property taxes. According to state law, all property has to be valued at the market value, has to be taxed at the market value.
Mm-hmm.
And so when we see such strong demand for housing, driving up housing prices, even if you didn't buy a house or sell a house, the house next door has gone up in value uh, because of that, because it's worth more if you put it on the market.
Mm-hmm.
So as home prices go up, you're definitely going to see taxes go up. There's always a lag. What we see right now, you can actually see the situation where home values go up this year
Mm-hmm.
and the economy softens next year, but taxes go up because the property is taxed as of January 1st. So anything that value as of January 1st, so anything that you see which is occurring today, tomorrow, July, August, won't be reflected into you get your tax bill, the tax you get. Excuse me, I'm stumbling. It's valued what the value was January 1st. You get your appraisal in the spring. You can protest in May. You're billed in the fall. So anything that's taking place right now, you won't see for well over another year. But you are going to see. I'll predict this: you are going to see your property taxes go up,
Mm-hmm.
both in commercial and in single family, and it's just because values are going up.
Mm-hmm. So, kind of looking for your opinion here. Teresa's asking, so in your opinion, is it not a good time to buy an investment property?
Oh, I need to be real careful. One thing, excuse me, Teresa, I would need to take a sip of Earl Grey. I need to keep my vocal cords lubricated. Oh, I need to be careful. I'm not an investment advisor.
Mm-hmm.
Uh, but so, I don't know if anybody out there still remembers Will Rogers. He was a comedian, a humorist in the 30s. And he had this expression. He says, the best investment is real estate because they're not making any more of it. Or the best investment is land because they're not making any more of it.
Mm-hmm.
Uh, it depends upon your horizon. It depends upon whether you're going to buy something and you're going to want to flip it in 5 years or flip it in 10
Mm-hmm.
or flip it in 6 months. So I can't answer that. Is now a good time to buy real estate or not? It depends upon whether you're buying a single family or multifamily. It depends whether you're buying raw land, whether you're buying a strip shopping center, whether you're buying industrial. It
Mm-hmm.
depends upon your horizon. It depends upon how much you're going to have to put down and how much you're going to have to pay to finance it, and then what rent you can get. So it's. I think it's always a good time to buy real estate. It depends upon though your horizon for when you plan to uh, turn it to get the capital gain, or whether you're buying it to generate an income over time.
Okay, very good. Thank you. So I want to switch gears just a little bit here and talk a little bit. You mentioned this or alluded to this a little bit earlier The goal by increasing interest rates and shifting monetary policy has been to try to achieve a soft landing, as they're saying, for the economy. Can you explain what that means?
Yeah, the concern is that the Fed will raise interest rates too high and too fast to where they send the U.S. into recession. If they raise interest rates too high and too fast, everything becomes much more expensive to finance. Whether it's, we talked about consumer purchases, but a lot of companies finance their inventory, or they finance the construction of a building, or they take out a working capital loan of some sort. If the Fed raises interest rates too high, it slows down business investment, it slows down business purchases, it slows down consumer purchases, and it slows it down so much to where what happens is companies find themselves with too much inventory, or companies find that they decide to put off that decision to build a new factory or plant, or individuals decide they're not going to buy the house because interest rates have gone so high. And what they've done is the idea is you raise interest rates to tamp down demand, but the concern is they'll tamp down it too much. So the idea is a soft landing is to raise interest rates just enough to take the froth out of the system, to take out those sort of marginal purchases and marginal decisions, to get it down where it's a more sustainable level. And by getting it down where demand softens just a little bit, there's less pressure on prices. And so the soft landing is how can we raise interest rates just enough to slow economic growth, but not so much to where we actually see a contraction in the economy.
Okay, thank you for explaining that. Because again, we see some of those headlines, and you always have a way of explaining things to us that makes a lot of sense. So we appreciate that.
Sure. Glad to do it, Christina.
Yes, absolutely. So I'm sure she means this as a joke, but just have to share it. Claudia said, you said they don't create more land, but now we're going into space. So do you have any tips on how to get licensed in space?
There's a company based in Clear Lake called Axiom. They're coming back. They just had the first private sector visit to the space station. I think it was fairly cheap. I think it was only $55 million per person per ticket.
There you go.
All I need to is you guys either need to raise your commissions or sell more houses, and then you can get up there. But yeah, I think it's a great idea.
Yeah.
Think about the views you will have.
Right. Amazing views.
And what's the question? Location, location, location. I mean, it's a great location.
It is a great location. Alrighty. So, on to something a little more serious, of course, but Fannie Mae has now updated its economic forecast to include a modest recession in the second half of 2023. How does this line up with your expectations, and how would this affect the Houston region?
First thing is, I want to say I do not see a recession in 2022. That's all. There will not be a U.S. or a Houston recession in 2022. Got that? I want to make sure.
Got it.
It doesn't mean there's not going to be some stress. I'm really concerned about there being a recession in Europe, especially since Europe gets so much of its energy from Russia.
Hmm.
I'm concerned about problems happening overseas in some of the emerging markets. And what there's a concern about places like Egypt and Tunisia and Indonesia being able to get food because they import an awful lot of wheat and grain from Russia. Also, we're seeing with the problems that are occurring in Eastern Europe, you're starting to see the dollar strengthen. You're starting to see interest rates go up. It's going to make it more difficult for the emerging markets to service their debt. And so if something happens in the US, it's going to happen because it happened somewhere else first. It's going to happen because there was a recession in Europe, or there was a recession in the Far East, or the emerging markets started defaulting on debt. So there would be a time lag. And that's the reason why I say I don't see a recession in Houston or in the US this year.
Hmm.
Next year, there's an awful lot that can happen. If the war in the Ukraine goes on for another 6 months and continues to disrupt supply chains, yeah, it could be, but right now we have so much strength in the U.S. and so much momentum in Houston. The Purchasing Managers Index, which I like to talk about, both the U.S. PMI and the Houston PMI, is both very strong.
Hmm.
Then I need to look back down, see if I can find my note about interest rate. The U.S. unemployment rate's 3.5%. I mean, no, it's 3.6%. Prior to the pandemic, it was 3.5.
Hmm.
I mean, the economy, everything is so tight and so strong and so almost overheated right now that we've got plenty of momentum to carry us into the first part of next year. I mean, next year is a long time. Okay, so we're what? This is what, the fourth month of the year?
Mm-hmm.
So we're looking at 9 months from now, or are we looking at 21 months from now?
Mm-hmm.
Recession in January of 2023, or recession in December 2023? So I don't see a recession this year. Next year, yeah, I could. It's going to depend upon what happens with the Fed. But I think Fannie Mae has it right that if there is a recession, it's going to be very mild.
Mm-hmm.
Also, I mean, when you throw out that word recession, it scares people. I mean, it's a big word. It depends upon whether you're looking at a recession like we had, like we just got out of
Mm-hmm.
the recession that we had with COVID, or something like that happened in 08 or 09.
Mm-hmm.
It's a scary word. There are different ways you look at a recession too. You can have a recession to where GDP does not grow for 2 consecutive quarters, or it actually slips a little bit. But there's actually a group out there called the National Bureau for Economic Research that has something called a recession cycle dating committee. Actually, it's the Business Cycle Dating Committee. And actually, they're told by Congress, they've got the authority by Congress to date the beginning and the end of a recession. And they don't just look at GDP, they look at GDP. They look at retail sales, they look at wholesale sales, they look at business investment, they look at employment growth, they look at income, and they look at all those things before they say we're in a recession. I could see a situation next year where we have GDP is flat, or actually declines, but we see no job losses because the job market is so tight. Companies are not going to lay workers off when they can't find enough workers as it is. And if they saw sales flatten, the odds are they're going to find some way to keep those people busy.
Mm-hmm.
They'd be very reluctant to let them go because they're worried about finding them when things pick back up. So yeah, we might see a recession in the sense that GDP flatlines, GDP doesn't grow very much, but I don't see a recession in the terms of significant layoffs and high unemployment rate.
Okay, then that's good news. Question here from Basil. He's asking, what is your expectation for building material prices in the short term and long term?
Well, the Fed's trying to handle it for us. They're trying to raise interest rates to tamp down demand. I still think we're going to see construction costs, especially lumber, stay elevated for a while as long as housing demand is strong, and as long as demand for other commercial properties is strong.
Mm-hmm.
The supply chain issues that we have, they're going to be with us at least another 6 months, if not another year. We'll see. It's amazing that it's taken this long and we still haven't gotten resolved. But I'm concerned about supply chain issues, and building costs will still be elevated for at least 6 months, if not another year.
Okay. Another question here from Alicia asking, any thoughts on the probability of an increase with our homeless situation as home ownership becomes more difficult and rents increase?
Okay. That's one I haven't given much thought to.
Mm-hmm.
What you're most likely going to see as rents and house prices increase is families settling for less house or
Mm-hmm.
less desirable location or smaller apartments. Homelessness, it could uptick, but it wouldn't see something significant. There are all sorts of causes of homelessness. Some is mental illness, some of it is lost jobs, some of it is inability to find work.
Mm-hmm.
Yes, you could see an increase in homelessness, but you wouldn't see a surge in homelessness.
Mm-hmm.
You might see an increase in homelessness because people can't afford to rent a Class D or a Class C apartment. But I don't see people you know, I don't know. As you see, I'm struggling with this just a little
Yeah.
bit.
Yeah.
I could see it ticking up, but I don't see it surging.
Okay. And I appreciate that answer. We've definitely had we had actually Mayor Sylvester Turner on recently, and he was talking about the different programs that they've been putting together to benefit the homeless population in the Houston area. So you can read up more about that on the City of Houston website as well. So Claudia has I think a wonderful question here. She just said, what can we as agents do to help? So, we're looking at these rising interest rates. We're looking at these rising home prices. How do you think that agents can help their clients through this situation that they're dealing with right now?
That's a good question. That's one I haven't thought about. Um, well, it depends upon what the client is struggling with.
Mm-hmm.
If it's struggling with costs, you need to work that much harder to find something within their price range. If they're struggling with location, um, now Houston's a large area, and maybe rather than having them look out on the Katy Prairie, have them look, as I said, in Chambers County
Mm-hmm.
or in New Caney. One thing which is kind of nice, which has happened with Houston over the last 30 years, and we kind of saw that in the Harris County, suburban county population. When I first started my career 40 years ago, if I wanted a good paying white collar job, there was only one place I would find it, and that's in downtown. And what I do is you live in the suburbs and you drive into downtown.
Mm-hmm.
That's not the case anymore. There are opportunities to work in any of the surrounding counties and have a good paying white collar job or a good paying blue collar job.
Mm-hmm.
So I guess to answer your question, Claudia, is encourage your clients to be more flexible in where they will consider. And if it's a two income household, God, I need to be real careful. Maybe one of the earners agrees to commute, and the other earner says that they're going to find a job closer to home,
Mm-hmm.
and whoever's working closer to home is the one who might be the one who gets the dinner on the table and picks up the kids.
Mm-hmm.
Notice I'm being gender neutral in that.
Of course, yeah.
So uh, I guess the secret to deal with this is really flexibility
Mm-hmm.
and adaptability. One thing which is nice, the home building community has done a really good job of trying to adapt their products to keep them below $300,000, at $250,000, $300,000, which has kind of been the sweet spot.
Mm-hmm.
But you are seeing them going up on smaller lots, and you're also seeing them going up further out.
Mm-hmm.
So families may have to accept that they may have to just drive a little bit further. Of course, I don't know. I think it'd be kind of nice living out in the country, but it means at least one of the spouses is going to have a long commute.
Yeah, and based on some of what you were mentioning earlier with the increase of people working from home, or maybe they're in some sort of hybrid model with their employer, maybe the commute isn't as much of an issue as it might have been 2 years ago. So great advice. Thank you so much for that, Patrick.
Well, part of it you've touched on a really good part about that is discussions with the family beforehand. I guess it's part of the qualifying the client, and
Mm-hmm.
just make them aware, find out if they're going to work from home. Gosh, I wouldn't mind living in New Caney if I only had to drive into work one day a week or 2 days a week.
Right. Yeah.
So that's the trade-off. And usually, actually, when I'm in the office, I'm usually in the office till about 6:30 or 7. Traffic's already pretty much gone by then. So
Yeah. Okay. Well, you did mention that you don't foresee a foreclosure, or excuse me, a recession this year. So what are your predictions for the remainder of 2022?
uh, for 2022 for Houston,
Mm-hmm.
continued strength. As I noted earlier, the PMI shows continued strength. It's still well above 50. We've actually seen an increase in exports from outside the region, and that bodes well for our manufacturing areas. Uh, Not just the U.S. Everyone's trying to rebuild their supply chains, and so we're exporting a lot more than we had in the past. Construction is going to continue to remain strong. Not office, but industrial remains strong, and single family, multifamily remains strong. We're actually we'll continue to see people moving here. Uh, Gosh, the number of out-of-state license plates, just on a whim. I live in the energy corridor, and I drive to downtown to go into work 2 or 3 days a week. And one day I figured, okay, between Dairy Ashford and downtown, I'm gonna count the number of out-of-state license plates that I see on the freeway. And in my 40-minute drive, I counted 12.
Wow.
And that's just in my narrow window. It's just so there's still a lot of people. So I still think we're going to have a lot of people moving here, which is going to continue to support the housing market. So for the rest of the year, I think we're going to do fairly well. I do not see a significant slowdown. Next year, though, I need to revisit and see how the economy looks. And starting in October, November, I'll start looking at what momentum we have and what factors we expect to come into play in 2023 before I start talking about 2023. Now, there's a really good chance we could skip a downturn in 2023,
Mm-hmm.
but we don't know what's going to happen the last quarter and the first quarter next year. So I'm reluctant to make a forecast for 2023. Things will be a
Wonderful.
little bit more dicier. Things will be a little bit more weaker. But as I said, that doesn't necessarily mean we're going to go into a recession.
Wonderful. Well, and I'm sure we'll have you back on the program later this year or early next year so we can get that prediction from you. Patrick, is there anything else that you would like to share with our members today?
Well, yeah, there's one slide I didn't share with you guys. Maybe I should have, but I think I'm going to start working it in my presentations again. I went and looked and tried to at population growth, and I began my career in March of '81. Golly, look at that, 41 years ago. Uh,
Happy anniversary.
Houston had, thank you. Houston had 3.1 million people. Now Houston has 7.2 million people. So we've added 4.1 million people over the last 40 years. And think about all the recessions we've gone through: the COVID recession, the Great Recession, the downturn associated with Enron and 9/11, the Gulf invasion, the downturn that we had, the horrible energy bust. Yet this region, we've always managed to find some way to get back on our feet. We've managed to find some way to grow. So yeah, we talk about recession, we talk about slowdowns and so forth. Those things are just temporary, guys. It's like that cough or that cold you have. You know you'll eventually get over it. You just need to live through it. So yeah, if we have a downturn next year, just buy a box of Kleenex, and we'll get through that as well. Houston still remains just an incredibly vibrant metro area with lots of opportunities. Uh, Gosh, I wish I could have bought stock. I wish there was a stock called Houston that I could have bought on the Nasdaq or the New York Stock Exchange. I'd be a rich man now. So
Yeah.
that's it, Christine. Christine, I've rambled a little bit, but as you can see, I'm high on Houston. It's a great place, and everyone should still not worry about the short term. Long term, we're going to do just fine.
Wonderful. And that's exactly why we bring you on, to get your perspective. So thank you again. Everybody in the comments is telling me how helpful this information has been. So we truly appreciate your time this morning,
Yeah,
Patrick.
go to our website, go to houston.org, look at the stuff we have there, find the newsletter and subscribe so you can continue to get some additional insights.
Excellent. Well, that is it for this Member Focus Monday. We will see you all next Monday at 9 a.m. Have a great week, everyone. Bye bye.